In this video, we will be talking about the disposal of non-current assets, which is there in the Igcse O-level textbook. So this is the past paper for 2021. So while going to the question paper, you can see here some additional information given, like extract from the just statement of financial position on 31st December 2019. A cost price is given, accumulated depreciation is given, and the net book value is given. This is the extract of SOFP of the fixtures. Okay, so during the year ended 31st December 2020, the following transactions took place. So the last year, okay, the current year, on 1st January 2020, fixtures $30,000 were purchased by check. Okay, the last year. On 30th June 2020, so June 2020, the fixtures were sold for $6,000, which was received by check. These fixtures had originally been purchased on 1st January 2018. So first of all, we need to understand the financial year in this question. So first itself, it's given an extract of just financial statement for financial position on 31st December 2019. So we can understand that the financial year is starting from January to December. Okay, it's ending on 31st December. So we need to start calculating depreciation from the disposed asset. Here, this asset is disposing. See here, on 30th June 2020, the fixtures were sold for 6,000. When it is selling, 30th June 2020, it is selling. So these fixtures were sold for $6,000, which was received by check. This fixture had been originally purchased 2018. So okay, so 2018 onwards, we need to calculate depreciation for the disposed asset. So this will be the financial year. I'm just drawing a timeline. Okay, so 2018 onwards, so 2018 January, then 2019, 2020, so okay, up to 2021. So this is the first financial year, 18-19, 19-20, and 2021. So first year, second year, third year. Okay, so now we can calculate the amount of depreciation. So this is the first procedure to identify the financial year. Okay, so before going to the question, we will go to the next part of the question. Then I will give you the journal entries which we need to follow for disposal of non-current assets. So JAS depreciates fixtures on straight line basis. So we know that straight line basis means it will be same amount for all the years. Okay, so she assumes fixtures will have useful life of 4 years. Okay, 4 years. At the time, the residual value will be 10% of original cost. So what is the equation for straight line method calculation, depreciation calculation? In straight line method, the cost price of the particular non-current assets minus residual value divided by number of useful years. Here cost price is how much? Cost price is 20,000 for the disposed asset. Okay, 20,000 minus residual value is 10% of the original cost. So it is 10% of 20,000 is 2,000, and divided by useful life is 4 years. It's given there. So 4 years. So while calculating, we will get the amount, that is 20,000 minus 2,000, that is 18,000. So 18,000 divided by number of years 4 will be 4,500. Okay, this is the depreciation we are charging from year 1 onwards. 4,500. Okay, so 2 years. So third year also we need to charge depreciation. So but before coming to the question or charging the depreciation, just check here when you are selling the non-current asset, because 2020 you are selling that non-current asset 20,000 worth. The cost of the fixture is 20,000, which you are selling on 30th June 2020. See here, the financial year is January to December, and you are selling on 30th June. It means how many months you used: January, February, March, April, May, June. 6 months only you use that. Okay, 6 months means up to June only you will charge depreciation. So it will be so that 4,500 is for the entire year. So 4,500 into 6 divided by 12. It means half of that 4,500 will be the depreciation. So you will get 2250. So last year's depreciation will be 2250. Okay, right. So just depreciate, it's on straight line basis. She assume the fixtures will be on fixture will have a useful life of 4 years, at which the time of the residual value will be 10% original cost, and depreciation is charged for each part of the year for which the fixtures are owned. So here in this question, before posting the entries in the ledger accounts, we have to go through the journals. Okay, so if you know these journal entries, double entries, journal entries, it will be very easy to post. So first journal entry is, for example, first process is transferring cost price of the disposed non-current asset. Okay, disposed non-current asset. Here it is fixtures. Okay, so the first procedure is transferring the cost price of the disposed fixtures. Here you can check the question: how much is the disposed cost price? See, this item you are disposing. Okay, on 30th June, the fixtures is selling, and it means that selling non-current asset is known as disposed asset. Okay, so here the cost price is 20,000. The cost price is 20,000 means that 20,000 is the cost price of the disposed fixtures. So this should be transferred to the disposed account or disposal account. Okay, so we have 3 accounts here. One is fixtures account, another one is provision for depreciation on fixtures account, and third one is fixtures disposal account. So first process is to transfer the cost price to the disposal account. So the entry will be, while transferring, disposal of the entry will be disposal of fixtures. Here non-current asset fixtures. Okay, disposal of fixtures account will be debited, and the fixtures account will be credited. So this will be at the cost price. Okay, cost price is 20,000. So 20,000 will be transferred to the fixtures account. Okay, then second entry will be transferring accumulated depreciation, of disposed non-current asset. Here the accumulated depreciation we need to calculate. That's why I calculated here how much you charge. The first you purchase here, okay, January 2018 you purchased that 20,000 worth non-current asset like fixtures. So it was 20,000. Okay, and here June 2020 you are selling at the price of 6,000, isn't it? 6,000. Okay, so these are the information given as per the question. So first year is 4,500 we charge depreciation. For second year also 4,500. Why it is 4,500? Because it is straight line method. So we got 4,500 here using straight line method. So 4,500 plus 4,500. Then last year is only 2250 because we are selling these fixtures on June 30th, right? 30th June. So it means we are only using 6 months here. 6 months. Okay, so we don't need to calculate the remaining 6 months. So it will be half of the 4,500. So the total will be 4,500 plus 4,500 plus 2250. So total you will get 11,250 will be the accumulated depreciation for that disposed asset. Okay, so 11,250 should be transferred to the disposal account. Okay, that is the second procedure, transferring the accumulated depreciation to disposal account. Okay, to disposal account, accumulated depreciation to disposed account. Here also transferring the cost of the price to the disposal account, transferring the cost price of the disposed non-current asset to disposal account. Okay, here transferring the accumulated depreciation of disposed non-current asset to the disposed account, disposal account. Okay, so the entry will be provision for depreciation of fixtures will be debited, and disposal of fixtures account will be credited. So the amount will be we calculated that it is altogether 11,250. Okay, now so this is the entry. So first we will transfer these two entries. Okay, this is accumulated depreciation. So this is the first process. Okay, so first process. So now we'll transfer this disposal entries in the relevant ledger accounts. So disposal of fixtures account is debited, means it's a debit side of the disposal account. Okay, debit side of the disposal account, we will transfer it. So disposal of the fixtures account is debited, so it is debit side of the disposal account. Okay, this is the debit side, this is the credit side. So we will write disposal of non-current asset debited, means debit side of the fixtures account, the corresponding entry will be recorded, fixtures account. So I'm writing here fixtures account, fixtures. Okay, so the amount is 20,000 at the cost price, right? So it is 20,000. So write the date also when you are transferring the while selling June 30th, isn't it? 2020. Okay, June 30th. Okay, so one entry is done. Second entry is fixtures account is credited 20,000. Okay, so fixtures account, you will go to the fixtures account. Fixtures account also you will write the date first, June 30th. June 30th, 2020. You will write here the corresponding entry. Okay, fixtures disposal, 20,000, because fixtures account is credited, that's why we are recording in the credit side of the fixtures account. Okay, so first entry is done, transferring the cost price of the disposed non-current asset, here disposed fixtures, to the disposal account. Second entry is transferring the accumulated depreciation of the disposed. How much is the accumulated depreciation? 11,000. We calculated that 4,500 plus 4,500 plus 2250. Okay, this is the total accumulated depreciation. So you will get 11,250. So provision for depreciation debited. Here. Okay, provision for depreciation debited. Now let's pause the second entry, provision for depreciation debited. So debit side of the provision. Okay, write the date June 30th. The corresponding entry is fixtures disposal. Okay, the amount is 11,250, isn't it? The calculated amount is 11,250. Yes. So first entry is done. Second double entry is disposal of fixtures account is credited. So the credit side of the disposal account, right here, June 30th, write the corresponding entry, provision. Provision for depreciation. $11,250. So 2 entries are done. See, in this question, the opening balance is already given, okay, which is there in your question, the opening balance. So we don't need to take it. Here also, the opening balance of the fixtures is also given. See, if it is not given, you have to take it first, okay. You can see here, this is the opening balance of the fixtures, and this is the opening balance of the provision for depreciation. Fixtures is an asset, so it's a debit balance account, and provision for depreciation is a liability, so it's a credit balance account, okay. So that's why they took in the debit side of the fixtures account opening balance brought down on January 1st, and provision for depreciation, it's in the credit side January 1st, okay. So if the opening balance not given, you have to take it. Now the next procedure is third journal entry will be, see, we know that as per the question, we are selling this non-current asset, right? On June 30th, 2020, the fixtures had sold for 6,000, right? Now, what will be the journal entry for while selling the non-current asset? While selling non-current assets, okay, the entry will be bank account debited, because we are receiving money while selling. It's a capital receipt, isn't it? So bank account is debited, and we will transfer this to disposal account. So disposal of fixtures account will be credited 6,000, because this asset is no more existed in your business. So we are transferring this to disposal account. So here we are not keeping bank account, so we cannot post in the bank account here, okay. So only disposal account is there. So disposal account we will write in the credit side, because disposal is credited, isn't it? So same date, so I'm writing here the corresponding entry, bank, okay. This is selling, okay. For your understanding, I'm writing selling. That was 6,000, okay. The corresponding entry means the debit entry we cannot record here, because we have only 3 accounts here: disposal account, provision account, and the asset account, fixtures account. So this is the entry for the selling of non-current assets, okay. Now we need to calculate whether it is a profit or loss for the sales, okay. While selling, we need to calculate whether it is profit or loss. So how we will calculate? The profit or loss calculation will be like, the cost price is how much? The cost price of the fixture is 20,000, okay. The accumulated depreciation we charge is accumulated depreciation we charge 11,250, okay. So how much is the net book value of the disposed asset? 20,000 minus 11,250 will be 8,750. This is the current net book value of the non-current assets, okay. The fixtures, net book value of the fixtures. Now what is your selling value? SB means selling value, okay. We are selling it for $6,000, isn't it? So here you know that you have the fixtures worth 8,750, but you are selling for less value. So 8,750 is less, the less price is selling value, so it is less than the net book value, isn't it? Selling value is less than the net book value, so that is a loss for the firm. So 2,750 is the loss for the firm, isn't it? So if it is loss, what will be the journal entry? That will be the next journal entry. The loss transferred to loss transferred to income statement. The loss should be transferred to the income statement. The entry will be income statement account transferring entry, okay. Income statement account is debited, and disposal of fixtures account will be credited. So the amount will be 2750. The amount is 2750. Now we need to post it. So here we don't have income statement. Okay, so we will post only the disposal account, right? So that is credited. Disposal is credited, means credit side. At what date you will post here? It will be year end. Okay, December 31st, because we will prepare financial statement at the end of the year only. So the financial year is January to December here. So December we will transfer the amount to the income statement if it is loss or profit. So the corresponding entry you will write here, income statement. This is loss. Okay, loss. I'm writing in bracket for your understanding, 2750. Okay, now okay, so the disposal entries are over now. Okay, right, here also, okay, all the entries we done related to the disposal. Additionally, one more information given in your question. See here, during the year you purchased on January 2020, it means last year, okay, 2020, you purchased for fixtures 30,000 were purchased by check. So what will be the journal entry for that? It is new fixtures. Okay, so fixtures account will be debited by check, means bank account will be credited with 30,000. This is additional purchase. Okay, not disposed one. So this also we need to record 2020 here. So that will be bank account debited or bank account credited, the fixtures account debited, right? So fixtures account credited, fixtures account debited, bank account credited. So fixtures account debit side we will post here as bank. So I'm writing here in the second column, bank. Okay, it is for January 1st only we are purchasing, isn't it? January 1st, bank. The cost of the fixtures is 30,000. Now we took all the items now. Okay, right, so we can now balance the account. Before that, there are some remaining fixtures in your business, right? Some fixtures we sold it out, but even though there are remaining fixtures, right? So we need to calculate depreciation for the remaining fixtures. So which all are remaining fixtures, you can check here, because here you know that cost price is 1,15,000, and from this only 20,000 worth fixtures we sold it off. So there are remaining assets, isn't it? So the remaining asset is that is the first asset. Okay, the second one is this one. See, the 30,000 worth fixtures we additionally purchased on January. So that also we need to calculate. Okay, then last year we charged 2250, isn't it? Last year we charged 2250. That also should be transferred to the income statement, because we are preparing the financial statement for the last year 2020-21. So that depreciation should be shown in your financial statement. The remaining we will not take, okay, because that we already took in our previous financial statements. So here in the provision for depreciation account, the entry will be income statement debited, provision for depreciation. Okay, provision for depreciation account. So at the end of the year, December 31st, we will transfer to the remaining depreciation amount, means the depreciation for the remaining assets, okay, will be transferred to the income statement. So first we will transfer the amount using straight line method. I will show you the calculation. So first I'm taking the new equipment which we purchased. Okay, new fixtures. The cost price of the fixture is 30,000, which we purchased new. Okay, so that how we will calculate using straight line method. 30,000 as per the question. The residual value is 10% of the cost. So 3,000 divided by the number of useful years as per the question is 4. So it is 30,000 minus 3,000. It is 27,000 divided by 4. Divided by 4 will be 6,750. This amount should be transferred, isn't it? 6,750. Okay. Next equipment. the cost price was the remaining equipment, remaining fixtures. Okay, the cost was 1,15,000, isn't it? And how much we sold now? 20,000 worth asset we sold it off. So 1,15,000 minus 20,000 is 95,000. Okay, this is the remaining fixtures in the business. So the remaining fixtures, we need to calculate the depreciation for the current year, right? So that also will be using straight line method. 95,000 minus the 10% is the residual value is 9,500 divided by 4, same. So 95,000 minus 9,500 will be 85,500 divided by 4 will be 21,375. Okay, so this also we need to transfer to income statement, this also. And other than this one, last year we charged, how much we charged last year? New fixtures we already taken. Last year we charged the disposed fixtures that was 2250, isn't it? It means 4,500 into 6 by 12, because we sold it on 30th June. So the remaining balance is 2250. Okay, this also should be transferred to the income statement. Okay, so these three amount we need to take in the credit side of the provision for depreciation account. So I'm taking that here. Okay, so 21,375. okay, and 2250, which is the last year depreciation charge for the disposed asset. Then 6750 also. Okay, these three items should be transferred. So total you will get 30,375, isn't it? Right. So now we completed the all adjustments and the entries. Now we can balance the account. Okay, so it's an asset account. I'm balancing. So the debit side is higher, so the total will be 1,15,000 plus 30,000. It will be 1,45,000. So that you can take in the both the side, because debit side is higher. And 1,45,000 minus 20,000, that will be the balancing figure. Okay, so you can write here 31st balance carry down December. So then the amount will be 1,25,000, isn't it? 1,45,000 minus 20,000. That should be brought down as well on January 1st 2021, isn't it? 2021 you have to draw down it, so it will be carried on December, right? December 30th 2020. That should be brought down here, 1,25,000, isn't it? Balance brought down. Okay, now fixtures account closed. The second one is provision for depreciation account. We need to close it. Provision for depreciation account. So here the credit side is higher, isn't it? Credit side, so 77,625 plus 30,375. So total you will get 1,08,000, isn't it? 1,08,000. The balance amount we need to balance it. Balance carried on will be 1,08,000. 8,000 minus this one, 11,250. Then you will get balance as 96,750. This also will be December 31st. Okay, at the year end, and we will brought down to the new year, the January 1st 2021 balance brought down 96,750. Okay, now while coming to the disposal account, here also the both side will be equal. Okay, this side 20,000 because we closed that fixtures account. Okay, here also 20,000, isn't it? So this is all about the entries which you used to post in the disposal account, provision account, as well as fixtures account. So you should study these journal entries, disposal entries, and if you purchase new fixtures, what will be the entry? If you are selling, what will be the entry? And if it is loss, that what will be the entry? If it is profit, this will be in reverse order. Okay, so this is all about this question. Okay, thank you.